Good afternoon, everyone. It's 3:30 here in the UK on the 2nd of October, Friday the 2nd of October. And I'm sure unless you've been on Mars, you've heard the news that President Trump has tested positive for COVID-19, which could easily throw the American election upside down, and markets don't like upsets. At the open today, the S&P had sold off, I think, nearly 50 points at one stage, and it's in fact successfully filled that gap. At the moment, we're down about 23 points. As you can see, the number of declines twice that of advances, and VectorVest advocates caution when buying stocks at this time. The short-term trend is still up. The underlying trend is down, and we've got a confirmed down situation in the US markets. For most people, it's a time to do absolutely nothing at all, but watch stops on open positions. I have the VectorVest composite, in fact, here. There we go. That's the composite of the US market, which is an equally weighted index of all of the shares that we follow in North America, with our market timing indicator and the proprietary buy-sell ratio, the number of shares on a buy divided by the number of shares on a sell. I've loaded our longest term measure of the trend, and that's a buy signal. The long-term trend turned up on the 18th of May, and it turned down, folks, on the 11th of September. That's our longest term measure of the trend that has to be taken very seriously indeed by all. If you are a position trader, then you should certainly not be taking positions in this environment. Now, the next measure of the trend, medium-term measure of the trend, is called the DEW. And the DEW gave a signal, a little bit more data, after this sell-off on the 6th of April. It's sort of tattooed on my subconscious, that signal. And that signal went right through, and it gave a down signal on the 8th of September, a couple of days before the confirmed call. And that is still down. So the two big hitters of the VectorVest market timing world are still down. So medium-term traders and position traders should not be taking any new positions, should be watching their stops very, very carefully indeed. Okay. Now, if I in fact get rid of this and go to a 3-month chart, I can put up the shortest term measure of the trend, which is called the primary wave, and that primary wave turned up a couple of days ago, and I liked it because this, as I'll show you in a second, was 62% retracement of the last range. Now, whether you believe in Fibonacci or whether you think it's absolute rubbish, I assure you that traders and traders' floors take a great deal of significance in the Fibonacci levels. So I like this because it had what old traders would call an island reversal, a gap down and a gap up, and that's always positive. What we've seen is a pullback. Now, this pullback, I've taken a couple of positions in this, and I did a video midweek. I think many of you will have seen it, and I said that taking positions just with the primary wave is for people who haven't got a nervous disposition, because this can quite easily be what's known in the trading world as a bull trap. Nevertheless, as I speak, the market are doing its best to try and break up after that bout of bad news re the president. So this, however, would not be unprecedented even in the most bullish environments, because if I go back to the June low and just take the noise off, you can see on the June low the market came back, broke up, then came back for a few days, and then proceeded to move up the page. So I think that even under the most bullish circumstances, we could have expected a wave down here, and that's the basis of the left head and right shoulders of the inverted head and shoulders reversal. That's a bellwether of technical analysis. We had exactly the same thing at the March lows. As you can see, a few strong days off that low, the same as we've had at the minute, and then we get a pullback to that particular low. So I think this level is absolutely key, but we have to remember, folks, that the big hitter market timing systems, the confirm call and the DEW are down, and until that changes, then taking trades on the primary wave are only for the most aggressive traders that can manage risk and can put stop losses in place and won't freeze when it's time to take the stop losses. Anybody can put a stop loss into place, but only a few people can actually action them. So until you've proven mental posture and emotional response, then just wait at least for the DEW to turn up. But maybe I'm getting old and conservative. In fact, I'm quite sure I am. I want now to put up the S&P 500, and as you know, it's in bars because I trade the darn thing myself. And we have there's the June low, and there's that a little bit of a pullback that we had, and I assure you that little bit of a pullback caused a great deal of consternation at that particular time, and we could have the same thing now. As you can see, the market opened, went down, scared the cats and dogs, and now it's reversed, and it's actually touched yesterday's low. It's filled that gap. There are two types of gaps. I won't bother you with the definition of both of them, but nevertheless it's actually gone up and kissed that level. It's a very important level as I speak now at 20 to 4 because it needs to make its mind up now as to whether it's going to continue down after it's filled the gap. So those day traders that bet that the gap is going to be filled have made some money today. Now, there's a very interesting level here because invariably this pullback happens to a fib level. Now there's a chap down in Wales called Carwin who's renamed me Mr. 78%. So Carwin, that's where I think that this is coming to. Okay, even under the most positive circumstances, we can quite easily pull back to that 78% level before going again. So ladies and gentlemen, if you're in the American market, there's a good chance that if you are a bull, you've got 3 or 4 days of pain ahead of you. Maybe not 3 or 4 days, but maybe to next Tuesday or it. And clearly, if these levels go, there's an awful lot of air here down to the June lows. Okay, and certainly the primary wave will turn before that. Now, if I just, for the sheer hell of it, put the fib on the June low to the June high, as you can see, where am I now? Get this right, David. As you can see, that little double bottom on those 2 days occurred exactly at the 78% retracement. Okay, and that's, you can either believe that level is sent down by God, or you can believe that it's self-fulfilling because everybody was watching the level. That's up to you. Nevertheless, the 78% level is a very, very important level, and I'll certainly be watching for it. Nevertheless, this is looking quite good. If we were to break up from here, folks, then I think that this market will go very strongly indeed. Nevertheless, that's what my stomach says. I run into the American election. Maybe a couple of days sell off before that, but I shall not be trading my stomach. I'll be trading what the VectorVest market timing signals tell me. I have some positions in the US market, and I took them maybe full-heartedly, I don't know. I'm holding, make sure that's up to date, it is AMD, I'm holding Rock, Target, Apple, and the GDX. All of them are slightly in the money, and I bought them when the primary wave turned up a couple of days ago. They've all got fairly strong VectorVest credentials, and AMD, for example, is well in the money. I'm hoping that this little pullback over the next couple of days doesn't in fact upset that. If we look at AMD, as you can see of my technical background, I like the look of market coming down, taking out all the obvious stops, okay, and it fell in a falling wedge. If you come across my swing trading course, we'll talk about wedges. I love wedges. That was a beautiful spring. Ah, beauty. Look at that. That's my trade of the year. I sweated in this for a while at the 50 level, if you remember, and then it moved up. This opened here, and at the minute it's pushing up through this new high. This high, yesterday's high, this thing will fly, but it'll be dependent on what the market is doing. But I'm very, very happy with that. When you see a market coming down, folks, and taking out an obvious stop, seeking out that source of liquidity, that's always a very, very good sign indeed. One of my rules in swing trading is that I want to put my entries where the masses put their stops, and I assure you that the masses stops are underneath that low, and I want to try and put my entries there. So I have three rules for swing trading. One, the good trade is the hard trade, and buying it down there was not intellectually hard, but it was quite emotionally hard. Market's falling, you're buying it. I want to fade the short-term trend in the direction of the long-term trend. And number three, I want to put my entries where the masses put their stops. Okay, so AMD looking quite good indeed. So let's move to the UK. And in the UK, yesterday was a good day. The stimulus in the US, in fact, precipitated a great deal of green on the front page of VectorVest UK. But clearly this is reflecting Thursday's close, and the last time I looked, the FTSE was down 1%, in line with the sell-off in the S&P, etc. So short-term trend is up. The underlying trend is down. The DEW is down. We still got a confirmed up in place. Many people say, how can this confirmed up still be in place if the underlying trend is down? Well, for a confirmed down, ladies and gentlemen, the market must in fact sell off for 2 5-day periods in a row, and that in fact didn't occur as yet. It means that the underlying trend hasn't been down long enough to actually change the confirmed signals, and the confirmed signal does a really cracking job in keeping you in those long-term trends and avoiding the noise. If we pull up the UK composite, I'll try and show you that. There we have the confirmed calls on the 27th of April, again tattooed on my subconscious, and although the market has done absolutely nothing in the last couple of weeks, that confirmed call is still up. I particularly like this at the moment, folks, and again, those people that have done some of my courses will know that I'm particularly fond of a concept called reverse divergence, and we can see that the composite is rising, but the MTI is in fact falling and starting to move up here. So if we can keep this impetus going, I think we can actually move very strongly. This is a very strong signal on the FTSE. So we just need to wait, folks, to see pretty much what's going to happen in the US, because we'll follow it. This chart looks very strong to me, indeed. But as you know, I tend to be overly optimistic at times. There is, I'm still holding, I've been holding these since April. I'm very happy with Avon. It's been great. I'm very happy with Games Workshop. It's just been outstanding. These two shares are absolutely outstanding. But very happy with Liontrust, because Liontrust, in fact, did its best to get rid of us last week. There is Liontrust. There's the earnings per share moving up, and as you can see, this is a yearly chart. The earnings per share have moved up from 50 pence to 75 pence. That's just quite something in this environment. Market came back to here, went up, and then it pulled back. There was a deal going on here, and somebody got a sniff of it. And I'm quite sure that they knew that the stops would be underneath this low, so it went down there, caused stops to be triggered or people to chicken out if they didn't have formal stops in the system, and then all of a sudden it reversed. There was a deal there the other day, and Panmure Gordon, in fact, upgraded the target on the share. Their target is 15. Our target is near 18. So we've got an undervalued share, and that's my famous spring. I shouldn't say it's mine. It was designed 100 years ago by Richard Wyckoff, and I can just see all the UK people's eyes glazing over because they seem to think that I don't talk about anything else apart from springs. That spring has kept me fed and watered for about 40 years, folks, so that's why I'm so fond of it. And I think that there's more coming here. JD Sports gave us a great spring earlier in the year. Again, it tried to get rid of us along the way. There's the spring just here. The market, and this is a textbook one as well, because it came back to kiss that top. Can't make a new high, comes back to here, and then all of a sudden, I admit the earnings per share is not good in this environment. Then all of a sudden it goes from 6 to 8, and then this was on news. It gapped up here, comes back, kisses that old top, and now we're away again. So I think that that's assuming the general market can do what I think it can do. This is going to push new 52-week high very quickly indeed. Very, very pleased with that. Since the last time I've been here, the only new position is plus 500. Now, those of you that know me will know that plus 500 gave me a bit of what is called in South Africa a clap a couple of years ago. It's trading at 15. We believe it's worth 24. The RV is 1.49. The RS is 1.36. So impeccable VectorVest numbers. CI 1.83, and the growth rate reasonably respectable 11. So if we look at it's on a buy, but if we look at the chart, we can see if we maybe a 6-month chart, we can see over this period clearly people sitting at home with nothing else to do but to trade. This is a spread betting company, and I'm going to take that off for a second. There's earnings per share marked up strongly, and earnings per share in the last 6 months has gone from 50p to £1.50. That's quite something in this any environment, never mind this environment. There's a line in the sand just here, ladies and gentlemen. So before I get to the technicals, the fundamental position is pristine, okay, based on the VectorVest metrics, absolutely pristine. And this markup in earnings per share is always a very, very strong sign of an advance. It's our forecast earnings per share is a leading indicator of change. And if I get rid of the value now, so we get a little bit more chart, I couldn't resist this because that is a rounding bottom and that's a handle, and that's a chart pattern known as a cup and handle. One of the first patterns that I traded. Now, maybe I should have waited for it to break and close above that, but I couldn't resist it, so I bought in somewhere about here, and it's come back a little bit. It's going to take a while to get through those highs. I would expect it's come back strongly today. I own the share. It's not a spread bet, so the VectorVest stop loss, where's the stop loss, is down here somewhere, so plenty of room to let that run. So now I probably should have been in this a while back, because if you put on the stochastic, and I'm going to get rid of earnings per share now, I'm going to get rid of the stop. As you know, I hit cluttered charts. The price rose to here, but the stochastic fell to there, and that's another example of that reverse divergence setup, which invariably precipitates an exceptionally strong move, and that's exactly what happened. And if I put up earnings per share again, you can see that a few days after that the earnings per share moved up. I would suspect that somebody got a sniff of it here before it moved to the books. So this looks good to me. It's a trade that I had to take. I was a little worried about it because behavioral finance mistake number one is that if you've made money in a stock, you tend to gravitate to that stock again, which is the case for me in AMD. I admit, guilty, Your Honor. And if you've lost money in a stock, and I took a hit on plus 500, I don't know when it was, 18 months ago. It took me a while to actually pull the trigger on this. I should have got in down here, but didn't. So into it now, we should see what happens. Reasonably happy with that portfolio, and the technical picture on the UK market excites me greatly. In fact, I think it's in the best technical position that I've seen for quite a while. These and many, many other things we shall discuss at great length on Monday afternoon. Now, tomorrow afternoon I'll be presenting what's happening in the US market, what's happening in the UK market at Stan's International User Group. Hopefully I'll see some of you there. Then to the UK question and answer session on Monday afternoon. That's at 1:30 UK time. Anybody listening that would like a complimentary to that, then just email me, Trader Davy, DAVY @gmail.com, and I'll send you a full link. So folks, have a great weekend, and let's just go back to the American market. It's 8 minutes to 4, and go to home, and the American market, in fact, it closed the gap at about 33.60, and it was down 17 points one stage. It's now back down 28 points. Really, really important level at the moment as we fight this out. Just remember, even under the most positive circumstances, we could have a couple of days pain before the market moves again. Under the most pessimistic circumstances, a move down 3200, and there's an awful lot of fresh air below that, and the DEW is down and the confirmed call is down, so it's time to be very careful indeed. I hope this helped. Thanks very much.